230,000 Australians at risk of losing their home. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's have a look at this article from news.com.au, which is discussing mortgage stress and how 230,000 Aussie households are at risk of losing their homes. Now, remember, guys, this isn't the first time we're hearing this type of news. The RBA was doing modeling of a 40% crash. CBA were predicting a 30% crash. Every bank was predicting, and it was getting media attention, that there was going to be a significant correction in the housing market. What happened? Well, the government came to the rescue. So one could argue perhaps those articles were placed in the media to steer our politicians, to guide our politicians to prop up the housing sector, or maybe to get them even more excited so the intervention that they were going to do, I'll fix my collar, the intervention that they were going to do is magnified. Let's remind ourselves what the government did. They kept zombie companies alive, everyone. They changed the trading while insolvency rules. Insolvencies or external administrations are down half of where they should be, and they're slowly going to start tracking up. JobKeeper, everyone. JobKeeper, up to 9% of those engaged in the Victorian workforce were being supported by JobKeeper at one stage. It's going to be interesting to see what happens in the next week. You've got juicing the market, some short-term, some long-term. You've got a cash rate of 0%, pretty much, guys. You've got, remember, 3% used to be the emergency level when we were looking at these issues of housing affordability last year. I was going through some old RBA reports, and they were talking about 3% emergency rates, never get lower. There you go. You've got, you get the grants from state and federal government up to 80 grand. You've got 5% government loan guarantees, which got me angry, and now 2%, everyone. Negative gearing as long term, and that's a lot of people are using it in Australia, which you can't blame people for wanting to minimize their tax. We're the third most taxed country in the OECD. Go Australia, guys. We only got the bronze in being the most taxed. We'll get there. I'm confident. And then you had the super withdrawals, which were juicing up, I'd say, either debt reduction. I know the media is talking about gambling it away, but you've got to understand, and boob jobs and things. A lot of that media is directly getting advertising from the super funds. And you've got the banks and the unions that are controlling those. They want to control your money. It's just another slice that they get. Because us Australian plebs, we're too stupid to save. They couldn't just reduce the tax-free threshold and allow us, to save ourselves. But we couldn't do that. And I mean, home builder, guys, look at domestic dwellings there. It's shooting up. Everyone I'm talking to is flat out. Getting quotes is getting problematic. So you have people who are just exposed to this industry here, to the housing sector, to the construction sector, and they're flat out, they're thinking, fantastic, it's all good. But they don't realize that it's just one sector of the economy that's juiced up and their consequences. You've also got long-term reduced housing supply. We've got the banks giving mortgage holidays. You've got councils being picky and choosy with development. People not wanting stuff in my backyard. And I know here it's the wind power, but how many greenies would want wind power in their little suburbs? And all of that comes at a price. All of that intervention comes at a price. Our national debt, federal and state, is going to be 1.3 trillion pretty much by 23-24. And throughout that time as well, our economic complexity of Australia from 99 to 2019 has declined. Now, these are similar countries up here. Japan, what's this? Germany, South Korea. I need to zoom in with my manual eyes to see these because it's so small, but they've all stayed the same. All of these other countries have stayed the same. Some have even gotten better. We're the most notable that's gone down, along with good old Argentina, everyone. And that's to do with the complexity of our economy. I make the argument that because there's so many incentives to invest in property, the government will prop you up. They use property as a way to stimulate the economy. Because we're so highly taxed, it makes an effective way to reduce your taxation. There's capital growth benefits in property here in Australia, our culture. I would argue we see property as a precious metal here in Australia in some regards. There are Also, tax benefits. People negative gear it. And you may say, Florian, that makes rents cheap. Well, no, it doesn't, because it increases the demand for those assets to use to mitigate tax. So it drives up the property, so it causes rents to climb. So let's have a look at this article about mortgage stress. 230 Aussie households at risk of losing their home. Is this something that we have to be worried about? Or is this an economist that needs to get publicity? We'll have to see. Maybe I'm just becoming too cynical about all of this, everyone. And here's the thing, if you're pinning your hopes on a big correction, we've seen now that government will intervene left, right, or center. If this happens, who thinks we'll start to see Mortgage Keeper? The joke I made. Oh, I hope it doesn't become reality. I really hope it doesn't. So let's look at this. A leading economist has described the government's new scheme to help first home buyers as crazy, warning it could result in future problems. Which one, the 2% one or the 5% one? More than 230 households across Australia are in mortgage crisis, and people risk losing their homes, according to data released by Choice. Now, mortgage crisis. Now, the rule is, and this is from the ABS, and I'm going to deep dive into this as a good article sent to me by a data research company that I want to go through in another video, but that's when 30% of or more of your disposable income is going towards your housing. We looked at the SelfWealth report, so what was it, 86% or some insane number of people who go to the SelfWealth, which isn't surprising. You don't go to the SelfWealth normally, guys. You shouldn't. If you're well off, you shouldn't be going to the SelfWealth. That's kind of, dodgy. Anyway, the majority of them were in extreme housing stress, where they were spending over 50% or over of their income on housing. That's what we really need to look at. How many of them are in rentals? The top 10 suburbs nationally for mortgage stress cover urban and regional parts of New South Wales, Victoria, Queensland, and WA, based on analysis provided by DFA. Now, here's the thing, is 30% putting you at stress if you're spending more than 30% on your mortgage? If you're used to it. I mean, is that a boomer metric? Is that from days gone past, when you didn't have to save insane amounts of money just to get a deposit to get into a house? Maybe you're used to not spending so much. I'm hoping it's outdated, because I don't want to see houses fall and people being kicked out of their homes. No one wants to see that. I'd rather the economy just goes a bit boring, and then wages and innovation, or maybe they reduce some of the taxes and burdens on the citizens so it's easier to get into a house. You can find, if you reduce your tax that you have to pay, that's an instant pay rise for everyone in the country. No mention of that, though, by the pollies, is there? Anyway, in New South Wales and Victoria alone, 130,000 households are on the brink, said Choice. Across the country, the biggest postcode in crisis is 2560, with 10,578 households, which covers suburbs such as Erd, Aimbarvale, and Bradbury, and Campbelltown. Choice CEO Alan Kirkland said there are households where people are living fortnight to fortnight and are spending more than they're earning. Well, I mean, frankly, isn't that something that just always exists, guys? Just financial literacy is terrible. This means that they have to make difficult choices, like whether to put food on the table or keep up with repayments. If they can't maintain the juggling act, they risk losing their home. He said, yeah, and people will do that. People will make the sacrifices they have to make to keep your house. Maybe they'll push it too long. Maybe it's just temporary until times get better, until they start a new job, or until an idea gets off the ground. See, this is the thing. It's always painted as a bad thing, missing a meal or doing this. But, I mean, how many of you in the comments have started a business and you just worked like a nutcase? When you started your first business or you started an endeavor, you just, okay. How many of you slept at the office because you couldn't afford rent at home? Is there even a culture of that in Australia anymore? I'm sure there has to be. It never seems to bubble up to the mainstream media. We don't see it here. It's always people, oh no, you got to skip a meal. I mean, how many people work, 3-4 nights through the day and night to meet a project, to meet a deadline, to get something across the line, to get a win? We've had to do that. We did submissions for clients for the Commonwealth Games, and we had no notice, so we worked like nuts to get them something. We had, a submission for a big project or a new opportunity. You just work. You've got to do it. That's part of the culture. Do we see that in Australia, guys? Maybe it's just the groups that you surround yourself with. There are more than 10,000 Aussies facing mortgage problems in New South Wales, postcode of 2170, which encompasses Casula, Chipping, Norton, Hammond Vale and Liverpool with other suburbs. In WA, it's 665, and there are 10 postcodes in Queensland of 4350, while Victoria takes out 5 spots. WA rounded at the top, 10 nationally with 6,800 households. Okay. Low interest rates are helping for now. Well, yes, I mean, the cost of servicing a mortgage is just crazy. It's so low now. And, some people are saying, rates will go up, rates will go up. Here's the question. Will it be possible for them to increase rates? Here's the thing. We're just a little tiny country that's going to respond to things that happen around us in the world, honestly. The US will drive up. The US will have an impact on our rates, and I wonder how the RBA will respond. But leading independent economist Saul Eslake said he would be surprised if there was a significant increase in households experiencing mortgage stress, as interest rates have remained unchanged since November last year. Yeah, you're not going to really feel the stress until rates go up. You're probably used to paying 30%. But wait till you start getting more and more people paying 50%. That's going to make a bigger dent. Could you... Think about it, guys. Could you, what cuts would you do? What's your plan? What things are you going to reduce in your life if your mortgage doubles? We could do it. If our entire repayment doubled, we'd be fine. It'd be a little stressful. We'd have to cut back on a few things, but you could do it. What about the people that are right at the edge now? Interest rates have been coming down since 2011. Well, yeah, houses only go up, interest rates only go down the Australian way. And while people have been taking out bigger mortgages as rates have come down, it's hard to see how they can have been much of a significant increase in mortgage stress, other than a result of people's income falling, he told news.com.au. Well, that's what we'd be seeing. We've seen wages are going down, or total payroll is going down. He said, while there was a period last year when there were job losses and reductions in hours during the pandemic lockdowns, that was pretty much covered by a combination of JobKeeper, JobSeeker, and various mortgage deferrals. Some people may be having to service bigger mortgages with the end of deferral schemes and may be working reduced hours, he noted. It could contribute to an increase in mortgage stress, but I'd be surprised if it was significant and could lead to any significant pressure on selling prices, he added. However, he did warn that interest rates may rise earlier than the Reserve Bank has foreshadowed. When that does happen, because many people have taken on bigger mortgages during this period of record low interest rates, if they're surprised by the fact that interest rates start going up before 2024, that could result in a degree of increased mortgage stress, he said. Maybe some people are going to get a surprise. Safe lending laws. The federal government is looking at winding back safe lending laws, which has concerned consumer groups, but the government said there are other adequate protections in place. I'm not too worried about it. I think the people that are concerned about safe lending laws really, really have low opinions of people. I mean, aren't we meant to have agency? That's one way to learn financial literacy, is to lose a home. It's kind of sad. Where do we go? Where do we draw the line? I mean, the banks are not going to be completely stupid, guys. We've seen that. They're not your friends, but they want to protect their own interests. Consumer Action Law Centre Chief Executive Gerard Brody said the bill would abolish a borrower's right to legally challenge a lending decision and remove the role of the Australian Securities and Investment Commission in overseeing most bank lending. Yeah, I mean, I have not had a positive experience with ASIC at all. It's just a bill I pay. When I tried to use them to go after or to, force a company director who was trading while insolvent, not paying his bills, they pretty much ignored it. When one of their companies was committing fraud and robbing people, conning people online, they ignored it. They didn't care. So, whoop-de-doo. This is the thing. This is where a lot of this safety stuff, people will advocate for it. but how often have they actually interacted and worked with some of these government organizations? In many ways, it's a theater, guys. It's pretend. It placates the masses to make them think the government's doing something. This directly contradicts the Banking Royal Commission, which said that the existing laws should not only remain but be better enforced. More than 33,000 Australians and 125 community groups have signed an open letter against the National Consumer Credit Protection Amendments supporting Economic Recovery Bill 2020. Mr. Eslake said he did not see a need for relaxation of safe lending laws, which were introduced after the GFC in the aftermath of the Royal Commission into Banking. Honestly, I think the safe lending laws do more damage to the brokers than they do to the banks. There is no evidence at all to suggest people are having difficulty getting mortgage loans for reasons of the unwillingness of banks to lend. There may be difficulties getting a deposit, but that's not the bank's fault, he said. Indeed, I worry the government is going too far in encouraging people to take out mortgages with very little genuine equity stake. That is to say, taking out their super with the limit increase from $30,000 to $50,000 in the budget, letting another 10,000 people take out mortgages tied to 5% deposits, and worst of all, encouraging single parents to take out mortgages with a 2% deposit. I think these are crazy and fly in the face of what I should have learned from the US experience in the years before the GFC. Mr. Kirkland added that safe lending laws were put in place to avoid the huge damage to families and communities caused by mortgage stress. By making banks take care to avoid giving people loans they weren't able to repay. So what do you think, everyone? Do you think are you a fan of the banks taking that responsibility for people? Is that something, do you trust the banks? Do you want them doing that, guys? Do you want them doing that? So, what's the solution to all of this? What is the solution to all of this? Do you think we're going to see 230,000 people at mortgage stress, or is it only going to appear once we start to see an increase in interest rates? And will they be able to increase interest rates? I think long term, our obsession with property in Australia needs to end. We're dependent on property. It's what the government uses to intervene in the economy, guys. It's what every TV show is about. Are other countries as obsessed as we are with property? I don't think so. We'd have to be right up there. I can't see an average Aussie going out and taking their money and sticking it in gold or silver or even Bitcoin. But I can see them. I can see them buying a brick veneer with Mission Brown windows. Anyway, guys, thanks for watching. Let me know your thoughts and opinions on this one. Do you think we should be worried? Or is it just a little bit of hyperbole? We'll have to see. As always, thanks for watching. Please like, share, subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and want to help us out that little bit of extra, there are a few ways you can. You can join us on YouTube or Patreon. You can sign up for SelfWealth or Stake. You can use our affiliate links at Amazon, eBay, Independent Reserve, or even good old AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. Have a great day. I'll see you in the next episode. Bye for now.